I think a little bit of investor interest will go a long way when the total combined market capitalization of all publicly traded uranium companies is now less than $7 billion.
Welcome to Proven and Probable, where we deliver mining insights and bullion sales in the form of physical delivery, offshore depositories, and private blockchain distributed ledger technology.
Welcome to Proven and Probable. I'm your host, Maurice Jackson. Today, we will highlight a preeminent uranium and thorium explorer in Canada's Athabasca Basin. Joining us for a conversation is Jordan Trimble of Skyharbour Resources. Mr. Trimble, welcome to the show, sir.
Thanks for having me again.
Always a pleasure to have you on our program, sir. You have some exciting updates for us regarding drilling. But before we begin, Mr. Trimble, please introduce Skyharbour Resources and the opportunity the company presents to the market.
Sure. So for your listeners that aren't familiar with Skyharbour, we're a high-grade uranium exploration and early-stage development company. We have 6 projects in the Athabasca Basin, which is in northern Saskatchewan in Canada. It's the highest grade depository of uranium in the world. It's one of the top-ranked mining jurisdictions in the world, as ranked by the Fraser Institute. Really, as a number of people put it, the Saudi Arabia, if you will, of uranium. So we spent the last about 6.5, 7 years building up a project portfolio, and we've done a good job being opportunistic in a bear uranium market. It has been a depressed market for an extended period of time since Fukushima. That's created and presented the opportunity to acquire the asset base that we put together. And just to give you some numbers, the projects which do host a couple of uranium deposits, high-grade mineralization. They're at various stages of exploration and development, but we ranging from earlier stage, more grassroots projects to more advanced stage exploration. But we've been able to amass this portfolio by spending just under $5 million Canadian, a good chunk of that being paid in stock and in exploration expenditures, and to shed some light on the potential re-rating for this asset base as we come into a better uranium market. There's been about $90 million spent in historical exploration invested into the projects, and at one point, 2 of the projects were in a company that was valued at over $300 million in the last uranium bull market we saw in 2006, 2007. So again, hugely discounted valuations, and we're excited to have this project portfolio that we're now advancing, both with programs and exploration and drilling that we're carrying out and funding at our flagship project, but as well with partner companies, strategic partners that we've brought in to help advance some of our secondary projects. We do have 2 strategic partners, one of which is Denison Mines. They're our largest strategic shareholder. They're listed on the New York Stock Exchange and on the TSX, a larger uranium development company. The president and CEO, David Cates, is on our board. And secondly, we have a partner in Orano, which is France's largest uranium mining and nuclear company, headquartered in Paris. They're partners with us at one of our projects called the Preston project, whereby they're earning in up to 70% of the project by spending $8 million over a 6-year period, and provide a quick update on the exploration underway at that project later in the interview. But that's a summary of the company. I will just note as well, we're one of the few remaining active uranium junior mining companies out there. We've seen a major contraction in both the number of uranium companies and the valuations, the equity valuations of these companies. So it is unique in that it is one of the few ways of gaining investment exposure to this niche market and this specific metal. Uranium, as we know, is not as well followed as other larger market metals, but it does present its own unique opportunity with a very distinct set of fundamentals. And just recently, in the last week here, we've started to see the price of the metal move. It's moved almost 20% now off of off of its lows, and I think there's good reason to believe that that will continue despite what's happening in the broader market. And again, as one of a few remaining companies in the sector, we do offer investors exposure to that rising uranium price.
Jordan, how does Skyharbour's dual prong strategy as a high-grade uranium exploration company, as well as a prospect generator, place shareholders in a competitive advantage among your peers?
Yeah, so first and foremost, we are a exploration and discovery story, and there's some notable recent high-grade uranium discoveries that have been made in our neck of the woods in the Athabasca Basin in the last, call it 12 years. You look at Hathor back in 2008, 2009. It was ultimately acquired in a bidding war between Cameco and Rio. It was bought by Rio Tinto in 2012 for over $600 million. That discovery which became the Rough Rider deposit was highly accretive and a lot of value creation for early investors in that story. And then more recently, we've seen new discoveries made by NextGen, by Fission, by Denison at the Griffin deposit. And these are all perfect examples of what high-grade uranium discoveries offer investors. It's really unprecedented value creation in short periods of time. We are out there trying to emulate the success that some of these aforementioned companies have had over the last 12 years. We're out there looking to be that next big high-grade discovery story. The work that we're carrying out, the drilling that we're carrying out to accomplish this is mostly focused at our flagship Moore project. And just a quick history of the project, it's an interesting asset that we acquired back in 2016. We own 100% of it. It's had a fair bit of historical drilling and exploration, and high-grade uranium mineralization was discovered there in the early 2000s. But a lot of this historical work was focused in one or two geological settings in the Athabasca sandstone, which overlies the underlying basement rocks. And the contact between the sandstone and the underlying basement rocks is called the unconformity. And most of the high-grade mineralization that was discovered historically was either in the sandstone or at the unconformity, with very little work being done into drilling being done into the underlying basement rocks. More recently, the notable and major discoveries in the basin have been made in the underlying basement rocks. And so it's exciting for us right now because we're now testing these underlying basement rocks with recent drill programs and upcoming planned drill programs. We think there's much more uranium to be found in these basement rocks in the feeder zones that where the uranium comes up. And knowing that we have high-grade mineralization at the unconformity and in the sandstone, just to give you an example, we intersected in a previous program a few years ago a zone of 21% U3O8 uranium over about 1.5 meters. We've had other zones of multi-percent over good widths, and that's high value rock on a value dollar per ton basis. It's some of the most valuable ore out there. So we know that there's high grade in the sandstone and at the unconformity, but again, most of the historical work and the work that we've done to date has not been focused in testing the underlying basement rocks. And it's really been some new geophysical techniques and methodologies, as well as a better understanding of the geology, some new geological modeling that we've carried out over the last year that has refined these basement-hosted targets. So this winter program, which is just wrapping up, was predominantly focused on drill testing basement-hosted targets and feeder zones. We actually followed up on a discovery hole that we had last year, whereby we intersected high-grade uranium mineralization in an exploratory drill hole we drilled into the basement rocks. And so we've gone and followed up on that. We're very happy with the program, and we will have results to follow in the next month or two, so keep an eye out for news flow there. The second part of our overall strategy being a prospect generator. So as I mentioned, we have the 6 projects that we've acquired in our portfolio. What we do with our other projects outside of our flagship is we look to bring in partner companies that can fund and advance the projects, and we can in turn also get some cash and stock from these partner companies as they earn in typically a majority stake in the property. So we've consummated 2 deals thus far, one with our strategic partner Orano, as I mentioned earlier, whereby they have to spend upwards of $8 million to earn in 70% of our Preston project, and another company called Azincourt Energy, which is nearing completion of their earn-in at our East Preston project. There's still a $200,000 cash payment that needs to be made to us, but they've funded several $1 million in exploration expenditures and have issued shares and have made cash payments, and they can earn 70% at our East Preston project. So those are perfect examples of what the prospect generator model, whereby again we package our properties up and look to bring in partner companies that will then fund the exploration, and we get cash and stock as well as they earn in, and we ultimately become a joint venture partner. So we still have upside with any success in the exploration and development work, but we don't have to continuously raise money in the market and dilute. We can look to monetize the projects versus further dilution, and it's a good complement to our main focus, which is making a new high-grade or additional high-grade discoveries at our flagship Moore project.
Combining the virtues as a uranium explorer and project generator are truly complementary synergies. Skyharbour is currently conducting 3 active drill programs on the Preston, East Preston, and Moore Lake projects. Please provide us with updates on each one respectively.
Yeah, so starting with our flagship Moore project, we announced earlier in the year we had commenced a 2,500-meter drill program, again, testing predominantly basement targets. These are new targets that we've refined and identified in the underlying basement rocks. We think there's a larger deposit to be found in the underlying basement rocks, given that we have high-grade mineralization at the unconformity and in the sandstone. As I mentioned, we're going to have results. We have assays pending from that program, and we're happy with what we've seen. So keep an eye out for news flow on that. More info and details on that will be forthcoming. And in all likelihood, we will be following up with additional programs later this year and in 2021. At our other projects, which are partner funded, as I mentioned, Azincourt, they have been spending money at our East Preston project. Now they just completed a approximately 2,000-meter drill program and relatively shallow drilling, following up on a reconnaissance drill program they carried out last year, where they had some notable indicator minerals and alteration and graphitic conductors that they had drilled a few exploratory holes into. So the results are pending, assays are pending from that program. That'll augment news flow from our main drill program at our flagship Moore project. And then last but not least, Orano has commenced and is carrying out a field program at our Preston project as a part of their $8 million earn-in at that project. What they're doing is a DC resistivity geophysical program, which is designed to refine drill targets for upcoming drill programs at the property. So that's underway. It'll be wrapping up, and again, we'll have some news flow as results come in from that program. So bottom line is there's multiple irons in the fire, multiple opportunities for new discoveries and more uranium mineralization to be discovered at several different projects. And the bulk of it's being funded by partner companies. So that's an important point to note as well.
Jordan, I realize there may be some supply chain constraints in reference to the assays, but when should we expect to have some results?
Yeah, I mean, we haven't heard of any disruptions yet at the labs, but I would expect, given that these programs just recently wrapped up, I would expect to see results here probably in the next month to 2 months here, and we'll have a pretty steady flow of news between the various programs over that period of time, taking us into the summer months.
I see that Skyharbour has added a new member to the board of directors. Please share who was added and provide a summary of their skill sets that they bring into Skyharbour Resources.
Absolutely. So we recently announced an addition to our board of directors. A gentleman named Joe Gallucci has joined the board. I've been working with Joe for a little while over the last several years. Joe's the head investment banker, mining investment banker at Laurentian Bank in Montreal. He has a lot of history, extensive history in the mining space as a banker and as an analyst. Previously worked at BMO Capital Markets, GMP Dundee, and was a founding principal at 8 Capital, where he led their mining investment banking team before he moved over to Laurentian. He's worked with many companies. He's raised a lot of money for mining companies over through his career. And specifically for us, he has a history in the uranium sector. He has worked extensively with a number of uranium companies, and I see him being an integral part to the team going forward. One of the things I will note is ultimately what we are looking to do with Skyharbour on the back of exploration success and value creation in the field and with our strategic partners. And again, hopefully in a much better uranium market, we would ultimately like to sell the company to be the target of an acquisition by a larger company. And I think Joe will be a valuable resource to have as a director when that time comes. So in addition to Joe, as he's the most recent addition to the board, we do have I'd say a top-tier team, management and technical team. Myself and our chairman, Jim Pettit, are based here in Vancouver. Jim previously ran a gold company that I worked for called Bayfield Ventures, which was ultimately acquired by New Gold. That's when I started Skyharbour after in and around the time that Bayfield was acquired. And my technical team based in Saskatoon, my head geologist, Rick Kazmersky, who's a 40-year veteran in this sector, focused expertise on uranium exploration and discovery in the Athabasca Basin. He was the exploration manager at the world's largest uranium company, Cameco, for many years before starting his own uranium junior company called JNR, which ultimately he sold to Denison Mines. And that's when he joined our team when we started Skyharbour. A couple of other people on the advisory board include Paul Matizik, who's well known in our industry, having built and sold a handful of mining companies over the last 12 years. And his biggest win was a uranium company called Energy Metals Corp, which he sold for $1.8 billion in 2007. So a very well-rounded team with management and capital markets expertise, as well as focused expertise in the Athabasca Basin, uranium exploration and development in Saskatchewan.
There have been some recent notable developments in the uranium sector, including the suspension of operations at Cigar Lake in response to the virus. Can you give us your thoughts on these recent developments?
Absolutely. So as I pointed out earlier, we have seen the price of the metal move recently. We've seen almost a 20% increase in the spot price on the back of the recent announcement of suspension of operations and production at Cigar Lake and the McLean Lake mill that processes the ore from Cigar Lake. Cigar Lake accounts for just under or just over 13% of global primary mine supply. It is a massive mine, and it's the highest grade operating uranium mine in the world. It's Cameco that is the majority owner of it and operator. They've guided that it's going to be an initial 4-week suspension due to health concerns surrounding COVID-19 and the coronavirus. However, my gut is telling me that could be longer. We could see an extended suspension. I believe that you're going to see a restart of that operation, of that mine, based not on the underlying health concern that the reason that they took it offline, but for the look at the economic and commercial factors of restarting the mine. As we know, they shut down their other large operation and mine in the basin a couple of years back, McArthur River. It's been offline for a little while now, and they shut that down because of the low uranium price environment. As a result of that, they've had to buy a fair bit of material over the last little while in the spot market. Just before the coronavirus caused a number of these operational shutdowns, Cameco recently came out with their with quarterlies that stated that they would have to buy between 20 to 22 million pounds of uranium. They'd have to acquire that from somewhere, and in order to meet their contract delivery. So they have contracts with pre-negotiated contracts with utility companies and purchasing managers, fuel buyers, that they are required to deliver into. Now, that hasn't changed with everything that's going on. They're still required to make those deliveries. So with the McArthur River mine having been shut down, they've been forced to buy material, a good chunk of material in the spot market, and or draw down inventories. They've drawn down inventories well below their guided minimal threshold, so they don't have that as an option anymore. They have to acquire that material either by purchasing it in the market and or finding it from some other secondary supply source. These secondary supply sources or inventories are drying up. That's looking like it's becoming a less viable option for them. And in fact, they stated in those recent quarterlies and earnings that they would likely be having to buy most of that 20 to 22 million pounds in the spot market. Well, that was a couple months ago. And fast forward now with the other large mine that they've shut down at Cigar Lake, that number has just increased dramatically from the 20 to 22 million pounds. So with Cigar Lake shut down, if it is shut down for any further extended period of time, more than the month that they've initially guided, then that means that they'll have to, again, find that material from somewhere else. Likely will have to be in the spot market. And we've already seen in the last week the spot price tick up from about $24.50 to almost $28 actually. And I think a chunk of that has been coming from the market obviously tightening up with producers having to curtail production. And I think also we're going to see utilities likely start buying in the spot market to shore up supply. Just to kind of give some stats here, there's 7 mines account for over 2/3 of global supply with this metal. So it's highly concentrated amongst just a handful of mines in a couple of jurisdictions. Some other notable areas and mines to look out for in terms of the response to the virus is Namibia. It accounts for about 10% of global primary mine supply. They've already started shutting down their uranium mines, suspending production there. And then the big one will be Kazakhstan. Kazakhstan accounts for 40% of global supply. And it'll be interesting to see over the coming weeks if there's any supply disruption there, in addition to a couple mines in Australia, including Olympic Dam, where uranium is a byproduct, but it nonetheless accounts for about 4 to 5% of global supply. So major supply disruptions we're seeing because of the virus. I think you could see more of that. Again, if there's any extended production curtailment at any one of these mines, that's going to have a positive impact on the price. And as I mentioned before, on the demand side, and the demand for this metal is predominantly in nuclear reactors. It's relatively sticky demand. You're not going to see nuclear reactors aren't easy to turn on and off, so you're not going to see much in the way of a demand shock or demand disruption. I think that it's relatively insulated from what's happening globally. You'll see intermittent sources of electricity like wind, solar, that will likely go off first if there isn't the the electricity demand and consumption that we normally see. But in nuclear reactors, they're big operating plants, and again, they're not easy to just simply turn on and off. So I think you see a relatively insulated and sticky demand side in the backdrop of major supply disruptions, in addition to the supply disruptions and curtailment that we've seen already over the last couple of years.
Well, you're looking at a multitude of catalysts for the uranium price, which has actually bucked the general market trend recently and is moving higher. Do you see this as a trend continuing?
Yeah, I do. We went over some of the reasons why it's moving higher right now, but I do see this being a trend that continues. It's important to note that uranium has a very unique and distinct set of fundamentals and drivers. It's relatively uncorrelated to the broader market, and what you're seeing right now in this market is a prolonged bear market coming to an end. You're seeing a recovery take place. And it's right now being supply driven with these recent supply cuts. But just to go over some numbers, the supply demand fundamentals and picture for this commodity are as compelling as any commodity out there right now from a buyer standpoint. If you're looking at the supply side, we've seen supply now decrease. This is before the recent announcements and production suspensions, but we've seen supply decrease from about 163 million pounds in 2016 down to an estimated 140 million pounds in this year. And that's in the backdrop of growing demand that is estimated this year to be between 185 to 190 million pounds. So a pretty notable and significant supply deficit that's having to be met by secondary supplies. And we're seeing these markets tighten up, and I think we'll see that continue, especially with the supply disruptions that we're seeing, including Cigar Lake and other mines that have shut down or been suspended recently. So when you have that kind of a supply deficit and you have highly concentrated primary mine supply globally, just in a few operating mines, that really does set the stage for the serious price move as we're starting to see. And again, we're not in this sector. It's not like we're coming out of a 8 or 9 year bull market like we've seen in many other asset classes and sectors. This has been unfortunately for the last 8 or 9 years a very difficult sector to be in, and I think that we're seeing that now, that the cycle turn. We're seeing a reversal, and again, it's being driven by very specific fundamentals for the metal. So when you look at that, and then another thing I think worth noting as well is one of the biggest drivers for the uranium price historically has been utility contracting, right? So we talked about most uranium and most material being bought and sold and being acquired by nuclear utility companies through contracts that they have with the miners and with the suppliers. Well, we know that over 50% of these existing contracts expire by 2025, and you have to actually factor in about a year to 2 years where you have to fabricate and enrich the fuel. So you move that back about a year to 2 years, and so we're only several years away from the majority of these contracts having the risk of expiring. And so there's a lot of uncovered requirements 5 to 6 years out, and these utility companies are now, and purchasing managers are now going to have to come back and negotiate, are going to be forced to negotiate with the mining companies. And we know that the mining companies at the current, call it, low spot price of, $26, $27 a pound, that's well below the average global cost of production. We know that they're not going to settle for those prices in selling material over multi-year periods at those prices. So there has been an impasse as a result of that. Well, I think that finally comes to a head, and I think that ultimately the fuel buyers are going to have to pay more. They're going to have to buy the material at what we would deem to be somewhat normal prices, in that $40 to $60 range. The average price, the forecast price from analysts that cover the sector range from $45 to $60 a pound. So a significant move, I call it almost a doubling from the current spot price. So I see a new contracting cycle happening in short order. I think that'll be expedited with everything that's happening right now. And then another big thing more recently, and certainly with a focus in the United States, has been the security of supply. And whether it's in the U.S., it's a national security concern on where the U.S. sources its uranium. As we know, the U.S. is only produces about 1% of the uranium that it consumes annually. It's still the largest consumer of uranium for its nuclear reactor fleet, yet production has dwindled to next to nothing. It has to import the vast majority of its fuel, a good chunk of that coming from places like Kazakhstan, Russia, and Uzbekistan. So as I'm sure some of your listeners are familiar with, over the last couple of years, there was this Section 232 investigation that ended up leading to a decision in July of last year, which ultimately went against, I think, what most market participants were expecting, in that Trump and the administration decided against any trade action. And we did see, subsequent to that, a nuclear fuel working group set up, which is still there, to further investigate and look at the situation. We're waiting to get some resolution from that. That has created quite a bit of uncertainty and overhang, if you will, and it has, I think, led to some price weakness in the equities over the last year. The uncertainty around Section 232 and the Nuclear Fuel Working Group has forced certain U.S. nuclear utilities to the sidelines, and when the largest buyer and consumer of uranium globally isn't in the market as actively as they would be because of that, that's obviously going to have a detriment. It's going to be a detriment to the price and to share prices, and so we've seen that over the last while. But that is coming to an end as well. We did see earlier this year the announcement of a proposed $150 million a year budget for a domestic reserve. We're still waiting to see details on what that exactly looks like and what that entails. But again, it's I think it'll go a long way in just providing some visibility and clarity on what utilities in the U.S. Have to do in terms of where they have to buy from, and I think that will bring them back to the market, and that will go a long way. So again, it's a wide multitude of factors here, again, specific to the sector, that are driving higher prices right now, and I think will continue to drive higher uranium prices going forward.
We've covered the uranium price. Please provide us with the current share price and capital structure for Skyharbour Resources.
So Skyharbour has 75 million shares issued and outstanding. It trades at about a almost $10 million valuation market cap, so relatively low. You can see that I've been buying a fair bit of stock in the market recently. I see the current price and valuation is one of the best value propositions that this company's ever offered, given what we have going on in the field, with results coming out on several programs, high-grade discovery potential at our projects in the Athabasca Basin, strategic partnerships, and like I said earlier, I think a good shot at real value creation over the coming years as we advance our project base. But also just getting back to the macro picture for uranium and for this commodity, I do believe it will outperform other sectors and other metals over the coming months and potentially years, given that it has suffered through a notably long and ugly bear market, and we're just starting to see it come out of that right now. And I think with everything that's going on, globally right now. There's a bit of a reset that's been hit. And I think investors are going to be looking for asset classes and sectors that they may not have looked at over the last several years, and they're going to be looking at what is going to outperform, what is going to provide returns in a tough market. And again, given that this sector is relatively uncorrelated with the broader market, and that there's a good case to be made that you're going to see a higher commodity price over the next little while. I think a little bit of investor interest will go a long way when the total combined market capitalization of all publicly traded uranium companies is now less than $7 billion. So you have, and to put that in perspective, nuclear energy globally accounts for about 11% of electricity output. So here you have the companies that look for and mine the fuel for 11% of global electricity generation. The total combined market caps and valuations are only $7 billion. So a little bit of investor interest will go a long way. And importantly for us as a small cap company, we will see those dollars flow down to small cap names like Skyharbour relatively quickly. There aren't a whole bunch of large cap mining companies, ETFs, and you can't buy physical uranium. So again, it's a unique opportunity in that it offers leverage and torque on a rising uranium price, but you don't have to see a lot of money captured with larger cap names and other means of getting investment exposure. You'll see investor dollars trickle down relatively quickly to the mid-cap and small-cap names in the space.
Sir, what keeps you up at night that we don't know about?
Well, I think like everyone else right now, watching how this virus and pandemic plays out, it's created obviously a panic sell-off in the broader markets, and unfortunately, when you see days where the Dow's down 1,000, 2,000 points, you get a liquidity event and everything gets sold off. So I right now, given everything that's happening, from a health standpoint, loss of life and the collateral damage, if you will, of financial markets and selling off, and it's unprecedented times, and we just hope that things can get back to normal, and that we start seeing some more positive headlines out there. But that right now, unfortunately, is out of our control, obviously, and we want to make sure that everyone's safe and healthy, and we will get through this, and as I said earlier, we're excited about our prospects for Skyharbour. I think we do have a lot to offer and a unique value proposition here, especially at the current valuation.
Last question. What did I forget to ask?
I think that covers it all. We went through quite a bit, and so keep an eye out for news flow over the next several months. We're quite active. We've been quite active, and we're going to have a number of key near-term catalysts, including drill results. Keep an eye out for further news in the uranium sector, additional potential supply disruptions and cuts. Big one will be in a few weeks, whether we see the Cigar Lake mine restart or if we see an extended shutdown at the mine, and then also whether we see mines in Kazakhstan and other mines globally shut down. So there's despite everything that's happening, we specifically for Skyharbour, we do have a lot to look forward to, and I do believe that we're well positioned, very well positioned to benefit from a rising uranium price.
Mr. Trimble, for someone listening that wants to get more information on Skyharbour Resources, please share the contact details.
So the company's website is www.skyharbourltd.com. There's a wealth of information there, and all of our contact information is on the website.
Skyharbour Resources trades on the TSXV symbol SYH and on the OTCQB SYHBF. Skyharbour Resources is a sponsor of Proven and Probable, and we are proud shareholders for the virtues conveyed in today's message. Before you make your next bullion purchase, make sure you call me. I'm a licensed representative for Miles Franklin Precious Metals Investments, where we provide a number of options to expand your precious metals portfolio, from physical delivery, offshore depositories, precious metal IRAs, and private blockchain distributed ledger technology. Call me directly at 855-505-1900, or you may email Maurice at milesfranklin.com. Finally, please subscribe to provenandprobable.com for mining insights and bullion sales. Jordan Trimble of Skyharbour Resources, thank you for joining us today on Proven and Probable.
The information presented on Proven and Probable is provided for educational and informational purposes only, without any express or implied warranty of any kind, including warranties of accuracy, completeness, or fitness for any particular purpose. The information is not intended to be and does not constitute financial, investment, or trading advice, or any other advice. You should not make any financial, investment, or trading decision based on any of the information presented without first undertaking independent due diligence and consultation with a professional broker or competent financial advisor.